Example number 1. A machine shop purchased 10 years ago a milling machine for 60,000. A straight line depreciation reserve had been provided based on a 20-year life of the machine. The owner of the machine shop desires to replace the old milling machine with a modern one, having many advantages costing 100,000 pesos. It can sell the old unit for 20,000. How much new capital will be required for the purchase? So, this is the solution for the depreciation, wherein CO stands for the initial capital or original cost. Since the original cost of the machine is 60,000 10 years ago, having a machine life of 20 years, and we don't have any salvage value, therefore the depreciation is 3,000 per year. Okay, after 10 years, the depreciation amount would be, so that's 10 times the depreciation, that's 3,000 per year. So giving us a depreciated amount of 30,000 pesos. And the total amount available would be, total amount is equivalent to 30,000 plus 20,000 equivalent to 50,000 pesos. Therefore, the new capital required would be the difference of the cost of the modern unit and the total amount available for the purchase of the milling machine. New capital required would be 100,000 minus 50,000. 50,000 pesos will be the new capital required. Next, for number 2, a tax and duty-free importation of a 30 horsepower sand mill for paint manufacturing costs 360,000 pesos. CIF Manila. Bank charges, arrester and brokerage cost 5,000 pesos. Foundation and installation costs were 25,000 pesos. Other incidental expenses amount to 20,000 pesos. Salvage value of the mill is estimated to be 60,000 pesos after 20 years. Find the appraisal value of the mill using straight line depreciation at the end of 10 years and 15 years. For 10 years, the original cost would be the summation of the manufacturing cost, bank charges, arrester, brokerage cost, foundation and installation costs, and other incidental expenses. So the total of the original cost would be 410,000 pesos. The depreciation having a salvage value of 60,000 for 20-year lifespan would be, applying the formula, that would be 17,500 per year. But after 10 years, the depreciation amount would be 10 times 17,500, giving us 175,000 pesos. Therefore, the appraisal value of the mill is the original cost, which is 410,000, minus the depreciation amount of 175,000 pesos, giving us a value of 235,000 pesos. For 15 years, so the original cost would be 410,000 still, but for the D15, that becomes 262,500, and then the amount would be 147,500. For under sinking fund, a power to a remote transmitting station is provided by this electric generator unit. The original cost of the unit is 65,000 pesos. It costs 2,000 pesos to ship the unit to the job site. An additional cost of 3,000 pesos when incurred for installation. Letter A, determine the annual depreciation cost by the straight line method if the unit has an expected life of 10 years. The salvage value of the unit at the end of its life was expected to be 5,000 pesos. So the original cost would be equivalent to 70,000 pesos, and the depreciation is 6,500 per year. Letter B, determine the annual depreciation cost by sinking fund method. So sinking fund method would be this formula. Okay, so we have the original cost as 70,000 pesos minus the salvage value of 5,000 pesos over the interest. Our interest would be 5%. So our depreciation would be 5,167.80 pesos per year. Number 2, a broadcasting corporation purchased equipment worth 53,000 pesos and paid 1,500 pesos for the freight and delivery charges to the site. The equipment has a normal life of 10 years with a trade-in value, or trade-in value is like a salvage value, of 5,000 pesos against the purchase of new equipment at the end of life. Determine the depreciation per year and its book value at the end of 7 years using straight line method and sinking fund at an interest rate of 6%. So for the original cost, we have 54,500 for total. Salvage value as 5,000. So the depreciation using a straight line method would be 4,950 pesos per year. Now, at the end of 7 years, the depreciated amount will be 34,650. We're going to subtract that from the original cost of 54,500, giving us the cost at the 7th year as 19,850. But using sinking fund method, the depreciation would be 3,755.46 per year. At the end of 7 years, so the depreciated amount would be 31,522.7545, which is applied the formula for DN. And to solve for the book value at the end of 7 years, we're going to subtract the 31,522.7545 from the original cost of 54,500, giving us a book value of 22,977.2455 pesos. So next, this example will be solved using declining balance method. A certain type of machine loses 10% of its value each year. The machine costs 2,000 pesos originally. Make out a schedule showing the yearly depreciation and the book value at the end of each year for 5 years only. Okay. So the original cost is 2,000 pesos, as you can see here. Okay. And to solve for D1, depreciation during the first year, that's K multiplied by the original cost. It says here it loses its value 10% each year. That's why it's 0.1, giving us 200 as the depreciation. Now, to solve for the book value at the end of 1 year, that's original minus the depreciation, giving us a value of 1,800. Now that 1,800 is the new beginning book value at the second year. And then multiply that 1,800 by 10%. That's the depreciation to be subtracted from the original cost at the second year, giving us 1,620 as the book value at the end of the second year. Now, this becomes our new beginning value for the third year. And the depreciation amount is 162 to be subtracted from the original cost of 1,620, giving us 1,458 as the book value at the end of third year. Now, since that would be our beginning value for the fourth year, this is now our depreciation, 145.8 pesos. So let's subtract that from the original value for the fourth year, giving us 1,312.2 as the beginning value for the fifth year. And this is our depreciation to be subtracted from the beginning value, giving us a value of 1,180.98 as the book value at the end of the fifth year. Number 2, determine the rate of depreciation, the total depreciation up to the end of 8th year, and the book value at the end of 8 years for an asset that costs 15,000 new and has an estimated scrap value, like scrap value is scrap value or salvage value 2,000 at the end of 10 years by declining balance method and double declining balance method. Okay, so we just apply the formula for the solution of depreciation rate, book value, and total depreciation at the end of 8th year. Okay, so the given values are the original cost as 15,000, salvage value as 2,000, life of 10 years, and n is equivalent to 8 years. So we have to solve for the value of k first using this formula. Okay, so the formula would give us a value for k of 18.25%. And then using the formula for book value, so we can solve for the book value at the end of 8th year. Okay, substitute the values, giving us a value of 2,992.2188 as our book value at the end of 8th year. Now for the total depreciation at the 8th year, so that's original cost minus the book value, so gives us 12,007.7812. Using double declining method, the rate of depreciation is 2 over L, wherein L is 10 years, so therefore the rate of depreciation is 20%. Okay, so applying the formula, the book value at the end of 8th year is 2,516.5824. Now, if you're going to subtract that from the original cost, it gives us the total depreciation at the end of 8th year as 12,483.4176. Number 3, a plant bought a calciner for 220,000 pesos and used it for 10 years, the lifespan of the equipment. So therefore 10 years is our life year. What is the book value of the calciner after 5 years of use? Assume a scrap value of 20,000, so 20,000 is the salvage value, 22,000 for textbook. Okay, so 20,000 for straight line, 22,000 for declining balance, and 20,000 for double declining balance. For straight line method, okay, so we have to solve first what is the total depreciation at the end of 8th year. 5 years. Okay, so that's the original cost, salvage value. Okay, we just have to subtract that, and our answer would be 100,000. Next, for the book value at the end of 5 years, so we have 120,000. For declining balance method, okay, so we just have to apply the formula. Okay, so that's our original cost, the salvage value, 5 over 10. Okay, so therefore the book value at the end of 8th year is 69,570.1085. Using double declining method, okay, our salvage value is 20,000. Okay, so therefore our book value at the end of 5 years is 72,089.6. Okay, so for the sum of the years digit, we have to be familiar with this formula. Okay, so example of property whose life is 5 years. So you have your order here as 1, 2, 3, 4, 5, and then you have the reverse order as 5, 4, 3, 2, 1. But to better analyze this one, we have to have an example. A structure cost 12,000 pesos new. It is estimated to have a life of 5 years with a salvage value at the end of life of 1,000 pesos. Determine the book value at the end of each year of life. So there, you just applied the formula. So this is the depreciation factor. So C15 came from the summation of digits here. So that's our factor. And then just have to apply the formula. Right, so number 2. A television company purchased machinery for 100,000 pesos on July 1, 1979. It is estimated that it will have a useful life of 10 years. So the scrap value or the salvage value is 4,000 pesos. Production of 400,000 units and working hours of 120,000. The company uses the machinery for 14,000 hours in 1979 and 18,000 hours in 1980. The machinery produces 36,000 units in 1979 and 44,000 units in 1980. Compute the depreciation for 1980 using straight line, working hours, and output method. So here are the given parameters. The original cost as 100,000 pesos. Time as 400,000 units. Age or working hours for 120,000 hours. Salvage value as 4,000 in life of 10 years. Using straight line method, so we just have to apply the formula. So the original cost minus the salvage value over life of 10 years, that's 9,600. Working hours method, so that's our formula. We have to subtract the salvage value from the original cost over the total hours of 120,000 hours, and then multiply it with the work with 18,000 hours. Right, so giving us 14,400 pesos. Using output method, okay, so the total time would be 400,000 units, and then we have purchased, or we have created 44,000 units, so giving us 10,560.